These are companies that President Trump made clear he wants to have a wide door opened to them to be able to sell to the Chinese consumer. Look, Apple, we have seen Tim Cook's legacy being the ability to navigate China, whether that's the consumer of China, which more recently in their earnings saw a real re-amplification of the amount of sales that they're getting out of the Chinese consumer right now. So we're really starting to see iPhone demand coming back to that country. But most importantly, it's a supply chain focus. It's the fact that a load of iPhones are still made in China, a key relationship for Tim Cook, and therefore no wonder he was there. Qualcomm serving their chips over there, so Cristiano Amon heads over. You see, of course, Elon Musk. Tesla is making an awful lot of Teslas from the Shanghai Gigafactory. We're also seeing more broadly the fact that they're dependent on China for resources, for electric vehicle batteries. The dominance of China in rare earths just keeps on being this real focus in terms of the more geopolitical angst that we have with US and China relations. But again, Tesla has actually also seen an uptick in sales of Teslas in China, particularly in the recent months, up 36% or so. So that is a key market for them to expand and get FDA clearance maybe. So actually get full driving, self-driving is what he hopes, and regulation could be more welcoming to the autonomous future that he's really betting on. So there's a lot of hopes. And of course, the whirlwind appearance of Nvidia CEO Jensen Huang. In many ways, there was then an extraordinary move in Chinese shares, AI-related stocks, hoping that they would get access to the crucial H200 chips coming from Nvidia. For now, the clarity is that came up, but China doesn't want them. They've got clearance from the US to be able to sell to China, but China thus far wants to focus on its own supply chain. So actually, we're seeing a knock to Nvidia shares on the post-match analysis of this meeting.
That's what's fascinating to me is I think a lot of these folks were hoping to get some sort of a bump, and it hasn't really followed through, including with Boeing, who left with a deal to, correct me, I think it's to sell like 200 jets or something, but it's not as many as folks had hoped for. It may not be the wide-body aircrafts they were hoping for. Chinese aviation is obviously a huge and growing market, but this wasn't as good of a sale as they wanted, and you've seen that reflected in the price.
Now, Boeing's managed, apparently, to get an order for 200 aircraft. We don't know whether they're the 737 MAX. And most importantly is there were 500 being talked of. This is a company, though, that has sold less than 40 aircraft in the last decade to China. And this is because there is this ongoing tit for tat that China again wants to start building its own aircraft. To do that, they need engines and other parts of the supply chain to come from the United States. And so until they get access to some of those important parts, they're sort of limiting their purchase of Boeings. Now, the hope had been as far back as a year ago that they would get a 500 order. Now, we understand it's 200, according to the president. But the president did then go on Air Force One to say, well, maybe it might be up to 750. Look, we are again left wondering, mute from the actual CEO of Boeing as to really what has been agreed here. But there does seem to see some sense that they're gaining a little bit more access to the Chinese market once again. And it can only be good news if the two leaders of these countries are continuing to talk. And we know that, of course, President Xi is now perhaps due to come to the United States in autumn.
I want to go back to what you just said, that they're gaining a little bit more access to the Chinese market, because obviously for the president, that's his prevailing selling point for a lot of things, is we are going to be selling American goods. We're going to be bringing down this trade deficit. But I'm wondering if for these CEOs who, as you pointed out, are going to toe the party line, at least until they get off the plane, this was really about that a little bit, but much more about trying to preserve their own supply chains and their own ability to do business in China for the U.S. market, which really both these economies are kind of geared towards delivering.
It cannot be understated, the dominance of China and Taiwan, which is, of course, the key geopolitical elephant in the room here for U.S. supply chain. Look, 90% of all chips out there are manufactured in Taiwan. 90% of all processing of rare earths happens in China. Look, you can't use a smartphone. You can't have a magnet that goes into basically every single consumer electronics device you've ever used unless we have access to those rare earths from China. We are trying in the United States, that you're seeing manufacturing trying to be brought onshore, and MP Materials getting stakes being built by the U.S. government in that company to be able to build up the ability to mine and process here in the U.S., but it's going to take years. For now, China and Taiwan remain a linchpin in the supply chain question mark, and that is really the leverage that China knows it has.
So talk about that. I mean, especially at a time when these massive processing chips are so critical to all of these AI companies and everything they're trying to do. The language coming out of the Taiwan debate wasn't really indicative of a president that's willing to take on that conflict. We heard very strong messaging from the Chinese side that they said this was a red line from them, sent out a statement before that meeting had even happened, making it clear that they had delivered that message, and not really equal pushback from the administration. Do you think these business leaders are nervous about that? Do you think that's something they're saying to the administration when cameras are not on? And how big of an impact could any conflict in Taiwan have on AI and chip manufacturing?
Look, this will significantly stifle AI compute build-out if we don't remain seeing access to Taiwan. Yes, TSMC, the key chip fabricator to the entire world, Taiwan Semiconductor, is bringing manufacturing prowess here to the United States and Arizona. But again, that takes time. That takes talent as well that needs to be built here in the country. And so on every single tech leader's mind, and really it should be on every consumer's mind, how important the relationship is with Taiwan, what China really wants out of Taiwan, and what so-called potential clashes that Xi Jinping articulated might really mean in the longer term. When pressed, President Trump said, look, we remain neutral. He was on Fox News talking about the fact that their view on the relationship with Taiwan has not changed. But what does that mean in terms of potential changes coming in the long term? Look, we have the likes of Palmer Luckey, who, of course, co-founder of Anduril, very outspoken tech leader. And he's often said, look, he thinks there in the next decade could be a significant ramping up in escalation between China and Taiwan. And what does that mean for the relationship with the United States? This has to be top of mind. It has to be something that CEOs are talking about in closed doors and trying to bend the ear of the president on.
I want to move a little bit to Cisco, because Cisco's CEO didn't get on the plane with all the rest of the kids and go on the fun field trip. But the company stock actually saw a huge jump this week, partially due to AI and some planned job cuts. Do you think Cisco at this point can compete with some of these other huge AI names that we're a little bit more familiar with in that space?
Yeah, Chuck Robbins, and there was a mistake that was made. Initially, it was announced that he was going to be going, and we're all scratching our heads, being like, so Jensen's not going, but Chuck is, but Chuck's got his earnings at that particular moment. They had to correct the market that, no, actually, he's got some talks with analysts and investors to be having, but boy, did those talks go well. Absolute soaring in the stock. We saw the biggest move up than we've seen in decades. We're seeing at one point an intraday high reach, 17% move, I think it was more broadly. And this is about networking. This is about what's happening within the data center, the processing of data. And also, he's got a really growing part of the business. It's all about cybersecurity, the securitization and governance of all these AI agents that everyone's busy spinning up with whatever they're doing at home and vibe coding. But more broadly, agents are becoming a real impact in the workforce, but you need to be able to ensure that that's safe and governed. And so this is the new era of Cisco. They're leaning in to producing their own silicon as well, that will be going into those data centers for the networking that they're building out. But it means that they're having to reallocate resources. Up to 4,000 jobs could go. Look, that's only 5% of the business, but there's still humans, there's still people, there's still jobs and livelihoods that we talk about. But it's something that's happening more and more at the moment in terms of AI versus labor. At the moment, they're having to redeploy investment, trying to win the case that they are the future of AI, a storied Silicon Valley company that can really win in this current era of complete disruption.